What's good, everybody? It's Jonah. Come back at you with another video. So with this video, I'm going to do a recap for the day for Wednesday, July 15th. Now, what you need to understand is I did not trade on this day, and the reason why I did not trade on this day is because on this day it is CPI. Sorry, it is PPI. So before we jump in, right, we always look at the news for the day. And based on the news, right, for Wednesday, July 15th, you're seeing that there's a news event known as Core PPI at 8:30. So Core PPI, typically what it does at the 8:30, when that begins, price usually wicks up aggressively in both sides and it takes out traders. So normally leading up to that moment, right, price is usually consolidating. And then at 8:30 there's usually an aggressive wick on both sides to take out both buyers and sellers in the marketplace. I do not trade on this day because normally the wick takes out the traders and then prices continue to consolidate. There's usually not many setups, and if they are, they don't deliver as they should. So to me, it's better off to just stay away from this day. So that's why I didn't trade on this day. Now, of course, leading up, like for at least for the rest of the week, right? We have Thursday and Friday. So those days I'll be behind the charts actively trading. If opportunity presents itself, I'll take it, right? So today was core PPI, as you can see right on the bottom right. It is, July 15th, and it's 3 p.m. So the morning session already happened. So jumping right in, the first thing that we do on the 1 hour time frame, we use a 1 hour time frame to determine our bias, whether we think price is most likely to go up or down, right? Depending on the answer, we'll determine if we're looking to take buys or sells for the day. So the previous day, right, for Tuesday, we were bullish on price. However, that does not guarantee that we are going to maintain the same bias going into the next day, which is Wednesday. So let's jump in with the S&P to see what we decided on. So, of course, going into Tuesday, we were bullish because this high was formed and then this low. And then this high right here ultimately takes out this previous high. So initially we were bearish on this move, but then this push up cleared this high. So that um effectively made us enter the day bullish. Now this was the previous high that was formed. This high gets cleared with this high up here. So what is with this high was formed, what is the previous swing low, right? Prior to that upwards move, obviously is this low down here. Now, as you can see, this high eventually gets cleared with this high. Now it might be a little hard to see, so I'll just use candle, a line, right? Clear as day, you can see that this high clears that high, right? And prior to price making this high, where was the most recent swing low prior to that high, right? Obviously, it was right here with this low that got formed, right? Now this low clearly gets taken out by these candles right here, right? Price trades under this low. Now remember, in my opinion, it doesn't have to close, right? The candle doesn't have to close under, even though it technically eventually does close under. But to me, price does not have to close under. As long as price trades through, the second it moves a pip under, right? To me, that counts as a break of structure, right? And so when I seen this, I was bearish on the S&P, right? Now, same idea with the NAS, right? NAS for Tuesday, the day before, we were bullish. Why? Because price was moving down, price came up, and made a low right here, and then this high was taken out with these candles right here. So that was a sign that price was officially bullish. So now this high was a high that was formed after this high, right? So what is the high that broke this one, right? Obviously we see this high up here, and then this high gets taken out and was formed with another high here. However, it might be a bit hard to see, but this high is in fact the highest high. So if we go closer, right, and we zoom in a little more, right, you will see that this candle's high right here took out this high. So prior to this highest high, where was the most recent swing low, right? Of course, it was this candle right here, because this is the new high, right? So after the new high was formed, where's the most recent swing low? It was this low right here. And as you can see, price clearly trades under it, right? With this long wick right here. So to me, that counts as a break of structure. If let's just say you didn't accidentally use this low and then instead you use this low, right? Let's say you use this one as well, right? This one down here, right? It still would have gotten traded through as well. So it really doesn't matter, right? So for the S&P and the Nas, both pairs have shown me a willingness to want to go lower and trade lower. So that is why I approached this day. Once again, I did not trade on this day because this PPI is news that I stay away from. Did not trade on this day. However, both pairs are showing me signs that they want to go lower, that they're bearish. So now going in to the day, right? We go into 15-minute time frame, and now we look to determine the most recent swing high prior to 8:30, right? As our buy side liquidity, that is our liquidity point. So if we look at this black candle right here, this is the candle that ends in 8:30. So looking left, what's the most recent swing high? Of course, it's this high right here. So this will be marked as our buy side liquidity. And if we look to left, right, prior to 8:30, this is 8:30 right here, the most recent swing high. So might be a bit hard to tell, but this one is the most recent swing high, right? 30. Yeah, this one is the most recent swing high. So we have both of swing highs. Now, at this point, we can look to highlight our um, downside targets, right? Like if we look at the S&P, this low that gets formed right here, right now, this is the low of the session, and it even cleared out the London lows. But one thing I notice here, clear as day, right? You can't miss it, is the fact that price effectively forms almost an equal low, right? Now, for some traders, they see this as support, right? Other traders see this as a double bottom, which means buy, buy, buy. So most traders, when they see this, they'll be bullish. However, based on what we see on the high time frame bias, we are bearish. So many traders, when they take this trade right here, right, they're buying at this level. Where are they putting the stop loss? They're putting the stop loss right under here, or they're putting the stop loss here or down here, right? That's what most traders are thinking based on retail logic, right? So right now, this is what I have as my immediate setup. If you want, you can also put a low right here. And now I know some of you might have questions of what what are some legitimate targets, and you want to look at price action. Like think about it right here, from where the vertical line is for the S&P that I have. um this is where price opened up for the day, and as you can see, price pretty much consolidated. Like if you look at this is pretty much all price did, beginning from midnight to this day. So all price did consolidated, right? So if there was a lot of consolidation, look at our targets, right? Like this is the London low. This was the lowest point. The green background, that's all London, right? This wick right here, this is the London lows, and the London lows already taken out by the New York session lows, right? The brown is when New York session begins. So London lows already gone, right? So there's not really many more. Like when you see price hasn't really moved much and it just consolidated a lot, right? Then that's usually a sign that price isn't going to go very far, right? Then you have like, these lows and these lows, but then like, of course you have like other like downside targets, but for the most part, this right here, this is the main price action that you're looking at because this is like the immediate area, right? So that's where you want to go. When you take trades, you want to be trading in the immediate area. Like you want to go for low hanging fruit, wherever is most likely for price to head towards, right? So this is what I'm looking for as a potential setup, right? Because we're bearish on the higher time frame, so we want price to push up, right? We want price to go up, and then when price goes up, we want to be able to take price all the way down towards these levels because we are in fact bearish. And this to me is the main level right here because this one is a big pool of liquidity, right? You're seeing that price tap this area twice, so there's a lot of traders entering for buys right here, and there's also a lot of sell side liquidity down here as well because a lot of traders that are anticipating that when price breaks this level lower, that price is going to continue going lower, right? But this is to me, a lot of traders have their orders right there in the marketplace. Now, if we look at the NAS, right, where are some obvious targets, right? You have the low of the day. Same idea with NAS, right? The London lows was right here. It already got cleared with the New York lows. And then you have other obvious targets, right? You have the low of the day. Same idea with NAS, right? The London lows was right here. It already got cleared with the New York lows. And then you have other obvious targets, right? You have the you have still an open gap in the marketplace, and then you still have more extreme lows down here, right? So to me, these are the most immediate levels of price action that's available. So for me, this is what I mostly be looking for to close out most of my position. And then if you want to hold like a runner, like a 10-20% of your position runner to try to go for further targets, you can. But based on price action here, because we're on the 15-minute time frame, like these are all 15-minute candles, right? There hasn't been a ridiculous amount of expansion. Most of it has been consolidation, right? We kind of been in the same place. So you're not really on this day, I wouldn't expect a super massive move, right? So here we are. So now I'm jumping into the 1 minute time frame, and you can see, right, based on price action, you're seeing that this strong bullish candle right here, this candle right here, this is the 830 move, right? This is the core PPI news candle. So normally price wicks on both sides. In this case, price pretty much aggressively pushed up. And remember, where price has shown us that it's bearish. And so when we see this push up, we see this as a push higher to clear liquidity, right? We're not looking at this as a push higher to go up because price is bullish, right? We're looking at this as a push, right? You see this 830 candle. This is the 830 candle, right? That cleared that high. Same idea with this candle, right? This candle right here, it wicked this liquidity, right? So we're looking at this with the mindset that price is hunting liquidity, that it's moving up to activate buy side orders so that it can push price lower. We're not looking to chase this. There's a lot of traders that'll see this aggressive move and begin chasing price because they think price is bullish, right? Because they go off of just price action and they say, okay, price has been going down and structure was broken up here, so now price is bullish, and then they think that price is gonna go up, right? When higher time frame bias is saying that it wants to go down. So we have the buy side liquidity get taken, but it's no big deal, right? We're not too concerned about what happens after 8:30. It's just what you understand about 8:30 is 8:30 price is hunting liquidity, so it has a tendency to break all the rules. Everything that you've known about market structure, it has a tendency to completely go against that, right? Entirely. So you're seeing, right, the reason, and this is why I use both pairs in tandem, right, that I look at both pairs is because you're seeing a lot of the same moves, right? A lot of the same movements. So 8:30 move, price pushed up. Then it pushed up here, made another push, made another push, made another push, right? The same idea here. It pushed up, made another push, made another push, made another push, right? And these moves look almost identical. Look, if you look at this candle right here at 908, 909, structure was broken. 908, 909, structure was broken, right? You're seeing a lot of the same things happen over and over and over between these two pairs, right? There's a lot of correlation with these pairs, so I look at them pretty much like as one. So now we're getting close to 9:30 open. So here we go. So the next candle is going to be 9:30, right? So boom, right? So this right here, this is the 9:30 open. So now what that I've taught you guys, right? Usually at 9:30, that's when, the stock market opens. That's when volatility enters the market. And usually this is the opportunity for price to head in the opposite direction, right? We're anticipating price to be bearish. And so this bullish open, what did it do? It clearly cleared these highs right here. It basically took out the liquidity here. So if there were traders who entered for shorts, right? If let's just say traders were trying to short at this level down, right? They would have put their stop loss above here. And what did this candle do, right? This candle obviously wicked all the traders up here. So, and if we look at the NAS, right, this is the 9:30 open. It basically formed a doji, and a candle that looks indecisive. Now, when I seen this, to me, because I've been trading in these markets, right, this to me was a sign that price possibly wasn't going to go above here. And here's the thing: when I trade my strategy, right, if I'm bearish, like in this case, I'm bearish for the day, right? If I'm bearish, I need to see price make the high of the session. So right here, this high that I just circled for the NAS, this right now is the high of the New York, right? So this brown area, this is all of New York session, right? 9:30, this is what formed an indecisive candle. So usually when a candle forms like that, that's usually a sign that it probably doesn't end up going to where I want it to go, right? Because to me, this is the area that I need to see. I need to see price go above this candle and trade above it because I needed to make the high of the day, right? That is my strategy. I want the manipulation to make the high because I want to take a sell from the highest point. The same idea for the opposite, right? If I'm bullish, I want to buy price at the lowest possible point to then be able to ride the wave and profit on the way up. So right now, I'm not looking at the NAS because I'm not going to touch NAS until it clears the high. So normally at this point, I would put another ray and I would have it, have that sign right here where it says waiting for another push above because I want to see price make the high of the session. So right now, you don't do anything. If NAS never clears this, you don't ever do anything. You don't touch it, right? S&P, it cleared the high and it made the high of the session, right? If we look back, right? All the brown, this is the new high of New York, right? After 9:30. So to me, once again, I didn't trade on this day, but to me, if I was looking at both of these pairs, right, S&P is a pair that I'm looking at for a potential trade if I were trading on this day, right? So now we're going to continue watching. And now look what happened. S&P made a deeper push higher. That's what we want to see. We want to see price go higher because it's clearing out liquidity. And if we look to the left, it's clearing out more highs and things like that, right? Whereas on the NAS, we wanted to see it go higher to make the high of the day of New York session, but it didn't, right? You're already seeing bearish candles forming. So to me, that is signaling. First, we don't want to see that because then this liquidity gets taken, and then this liquidity also got taken, right, with this little push down. So there's less reason for price, if it does go up here, there's less reason for price to now want to go down. So I'm already not liking the price action for NAS. So mentally, I'm eliminating this pair as an option, right? And to me, because this was the only push it made, to me, it was probably a sign that prices wanted to tap into the fair value gap before actually going lower, right? So we'll just keep watching price action here. Whoa, okay. Skipped a few candles. That's okay. Now, if you're looking at NAS, right? What did NAS do? NAS not only went in and filled this entire gap, but it also came down and cleared this low right here. So at this point, right, NAS is completely out the picture because if I'm bearish on price, I want price higher and I want them to leave as many targets available at like towards the bottom so that if I sell price, it can hit all the targets. But NAS never even cleared the liquidity and never even, well, it cleared liquidity before 8:30, but it never came and made the high of the session after 9:30. So there's nothing for me to do, and NAS effectively pretty much took off. Now, I know some of you might be a little bit confused, wondering why NAS went down while the S&P went up. Now, the way I see it is, I still kept my buys for both pairs, but I'm just see this push up as it just being a liquidity grab. That price does in fact want to go down. And seeing this aggressive price action from NAS of price wanting to go down, to me, I thought that that was a pretty good sign that S&P would eventually follow suit. That S&P is just pushing up first to clear whatever orders and then be able to make its way down. So, of course, at this point, right, there's nothing really else to look at for NAS, right? It took out a lot of the targets going down. So I'm just going to full screen the S&P, right? So now the S&P is the only of the two pairs that is can potentially provide an opportunity. So this push up obviously clear a bunch of liquidity. Then what happens? If you pay attention, you'll see that it also formed this low, right? Because prior to this high, what was the most recent swing, right? It was this swing level right here, and that gets traded through with this candle. So you're not only seeing liquidity grabs, you're also seeing a break of structure and you're seeing a tiny gap right here. Now here's the thing. Here's the thing about gaps. Like this gap, if I go on the 1 minute time frame and try to draw a gap, right, that's obviously a super small gap. Like, yes, this technically counts as a fair value gap, yes, but ideally you don't want to be trading a gap that's so small you feel like you have to squint in order to see it, right? Like that's not necessarily ideal. Like if you're trading a gap, you want the fair value gap to be something that's noticeable, right? So this is a very tiny gap, so I'll understand why someone wouldn't want to necessarily trade that. So we'll just see what else happens, right? So candle pushes up, and then you see another aggressive bearish candle, and another candle. So you also want to be able to, you also want to check all the time frames because right now price came up, price is now breaking structure lower. You seen the NAS was already going down, taking out targets. So you're anticipating price to go lower. And it left a tiny gap there, so you could potentially have that as an entry. But that is super small. So what I was doing, right, I was looking at other time frames to see if there's anything else. Now here you also have another potential gap, right? Of course, granted, this is also tiny, but this is a slightly bigger, a little bit more noticeable gap than the other pair. I mean, sorry, than the other time frame. 3 minute time frame, nothing yet. 4 minute, nothing. 5 minute, nothing, right? So then let's just fast forward a few more candles, right? So now have a few more candles. So obviously you have a gap right here. This is noticeable, clear as day. However, this gap is pretty far down. Now, if you know this low right here, this is the low that formed the equal lows. So to me, this is the most obvious logical um location that price wants to go to. So if I were to put a short right here, right, put my stop loss above the high and then take it down to this level, this is not really ideal because I mean this is still a one-to-one. You can still take this trade, but I don't like having a stop loss that is absolutely massive. So for me at this point, I'm looking for any potential other areas where I can take price at a much better spot, right? So you can see there's also an entry here on the 2 minute, but I'm gonna keep scanning the time frame, see if there's anything else. Okay, so perfect. So here we're on the 5 minute time frame, and look what you see, right? 5 minute time frame, you see a gap right here. So once again, it's a smaller gap, but at the very least, this is a little bit tighter. So if you have, a big stop loss, then I would personally try to look for fair value gaps that are a little bit higher so that you can have a better risk to reward, right? So this was the gap on the 5 minute. Now remember, of course, you also have the gap up here for the 2 minute. So it's all depends. It's literally your preference. So right? This 2 minute gap is definitely higher than a 5 minute gap. So 5 minute gap is more likely to get hit, but here we have a gap in the marketplace, right? Even on the 5 minute time frame, you also can see this low also get traded through with this candle as well. So you're seeing all the signs of price wanting to go lower on top of higher time frame buys. So let's just say you decide to use this as your entry, right? You have your gap right there, and then you take profit, right? And you can decide on the different areas to take profit, right? Like you obviously have a massive fair value gap here that can serve as a partial. You have the low, which is the main low right here. This is like the big equal lows. This is a 1 to 8.7, and then potentially if you wanted to take price, a little further, you can take it to this level, and then you also have another low at this point here. So you can, decide how you want to approach this trading day, right? So that's effectively, if I were to have trade on this day, this is pretty much the setup that I'm looking at, right? A bearish setup, right, is giving us all of our confirmation. You got liquidity that got purged. We're bearish on higher time frame. Price is pushing down. It's leaving fair value gaps, right? And you're seeing targets, right? Target here, target here, target here, right? You get the idea. So it's just about you being patient and seeing if price is going to deliver on your trade, right? So then, as we continue on, right, price taps a little bit into the fair value gap, but that's okay, right? Because then if this low holds, then we can use that as like an area to take partials, right? So then we just watch price play out, and then boom, at this point, right at 9:59, pretty much 10 o'clock, your position will get triggered, and then you can have another take prop. You can have your first partial be at this low right here, right? So you're starting to see the trade idea and how it all forms. Now, eventually with price, you'll begin to see that price does in fact begin pushing deeper into um like drawdown, right? You're getting put into drawdown. Now, what you guys also might have noticed is that because we pushed so deep, right, price did in fact enter. Remember how we had the fair value gap right here on the 1 minute time frame, and then on the 2 minute time frame, you also had this tiny fair value gap right here, right? Price does in fact tap this level. Now, of course, it's typically unlikely for that to happen, but price would have also activated those levels as well. Now, If we just watch price on the 1 minute time frame, right? We'll just go candle after candle, right? You'll see that price gets very close to hitting our stop loss because the stop loss for me when I trade, I put it exactly at the high, right? Some traders might put it a point or two above the high, right? So they might have the stop loss like this, right? However, I have mine directly here. So technically speaking, right, we fast forward a few more candles, right? Technically speaking, sorry, if I were to have taken this trade, technically speaking, it most likely would have resulted in a loss because this high, even though it does not touch this high, usually when you're trading and taking a sell, when you enter a sell position, there's usually spread. So I would anticipate that this would have resulted in a loss. However, technically speaking, price does not touch this high. So if you were a trader and you had your stop loss, a point or two above, this high right here, then you would have been safe, right? So price goes down. After price gets really close to tapping it, what happens? Price suddenly begins melting, right? You're seeing the aggressive move down, another aggressive candle, and now you're going to start seeing some movement. So then we let price play out a little bit, and we're in some consolidation. So now with my new and improved strategy, right? I would now, if I were in this position, I would move my stop loss to break even at 11 o'clock, which is the end of the session, because I've noticed that in plenty of cases in the past 2 weeks, if you decide to move your stop loss earlier, usually because these fair value gaps are magnets, price will typically return to this fair value gap and take you out of break even, right? So you had to deal with some drawdown here, and then price goes into profit, and then it clears under this low right here. So this could have been your first partial that you would take for about a 1 to 115. So at the very least, you could take off 20% of your position to reduce some risk. And then we'll just sit here and watch price unfold, right? So price consolidates a little more. So then at this point right here, we've already reached 11 o'clock. So at this point, this is when I would now roll my stop loss to break even because my trade session is from 9:30 to 11, right? Usually that's when you would be getting off from your trading session and be done with the day. So we don't live to trade, we trade to live, right? We want to trade to be able to earn an income to then be able to have fun, relax, take care of our family, all that good stuff. So at that point, I would move my stop loss to break even because it's already past 11 o'clock. So now you're seeing what happens with price, right? Price with this wick right here, it clears this low, right? And let me put on the 5 minute time frame so you guys can get a better view, right? You see right here, this is the 1015 to 1020. This wick right here clears this massive liquidity pool, right? So at this point, I would have closed at the very least 80% of my position because this is a massive pool of liquidity. This is a double bottom. Some people might even consider this to be a triple bottom, right? So think there's a lot of traders who have orders. There's a lot of resting liquidity under here, and price went down and just wicked under it. So to me, that is like you should have, in my opinion, at least 80% of your position closed. And these levels down here and anything past that is usually just bonus, right? So then we just let price play out a little bit more, right? It sort of takes in sweet time, and then boom, right? This candle right here closes under this level, and then as you can see, price wicks under this final target. Now, if I play it out a little longer, right, you'll see, of course, price eventually actually now truly closes on this level. So why am I showing you guys this? So I'm showing you guys this because once again, even though this is core PPI, a news event where I wouldn't trade, I would stay away from this day because typically you don't really get setups. Typically price looks a little ugly, price is a little inaccurate, like it doesn't really deliver. And in this case, this was like a smaller move as far as movement. However, I'm showing you this because this is still the same strategy playing itself out, right? Like this is what I continue harping on. That price repeats. Price it like these markets and price is no different than you and I. And the reason why I say that is because we as people we're creatures of habits. There's certain things that we do each and every day, right? If for example, if let's just say you're a righty, right? Being right-handed is predominantly is your predominant like is your strong hand, right? Chances are almost every single day, if not every single day, you wake up and brush your teeth with your right hand. You drink out of drinks or bottles with your right hand. You text with your right hand, right? Like it's very unlikely that you would just suddenly wake up and choose to brush your teeth with your left hand, right? Or with your non-dominant hand, right? Like that usually doesn't happen, right? If it happens, it's unlikely. And it might happen once or twice, but then you'll probably revert back to doing things how you've always done it, right? And it's the same idea with price. There's going to be certain times where you might take a trade and then price might stop you out. Or there's going to be times where you might take a loss because, price didn't want to give you a setup. That doesn't mean the strategy is broken, right? You want to have a strategy in the marketplace that's going to repeat. And I'm recording these videos to show you guys live. Well, I mean, this isn't technically happening live, but to show you guys that this is what's happening each and every day. And I do everything purposefully on this channel. This is why with my trading videos, I, list out the name of the pair in the name, but then I also put a date on it. And I put the date in the title so that when you're able to like look back on it, you're able to see, okay, on this day, the strategy happened. On this day, the strategy played out. On this day, the strategy played out. On this day, the strategy played out. So then you now begin to believe it, that you begin to believe this as the truth, right? I like this is why I do this each and every day to show you that this is the game that the market is playing, right? Think about all the traders who thought that because of this aggressive move up that price was bullish, right? Like if you just look at this price action up here, right? You would think that price for the most part is bullish, right? Because if you look to the left, right? A lot of traders, they're trendline traders. They'll say, "Oh, look, price is bullish," or they'll make a trend line right here and say, "Oh, price is bullish," right? And so in their minds, they're thinking based on lower time frame price action, just a 5 minute price action, that price is bullish. And sure, it does give you a bullish rally, but price on the higher time frame was bearish. All of this move up here, this was just to essentially generate liquidity and to get orders in the marketplace so then price can actually move in the direction that it wanted to go, which is bearish, right? And for a lot of traders, that sounds a bit backwards. And to me, it was always confusing because if I was going to sell a pair, I always should think that I want to sell after price has shown me that it wants to go lower. But that's not how you succeed in trading. To succeed in trading, you have to like anticipate moves. You have to expect certain things to happen. It sounds very like just think about like for example, think about Bitcoin and the craze that people have for Bitcoins, right? You see on the news when Bitcoin is approaching an all-time high or nearing the all-time high, what do people start doing? People start running into the market and start buying Bitcoin because they're like, "Oh my God, Bitcoin is going up. Bitcoin's going to the moon, right?" That is the wrong way to approach it. If you truly wanted to buy Bitcoin, you want to buy it when it's at a low price. So then when it makes it to the all-time high, when it shattering records, you would have made a tremendous profit because you bought it when it was low, right? But people, they'll jump in when price is at the highest point to then try to buy it, right? And then there's very little movement and then price will just reverse, right? The same idea with this right here with this strategy. Like this strategy, we're hunting price because we're seeing it go higher, but we're expecting the higher move to just be a fake move. We're expecting that move to just be taking out liquidities and activating orders so that price can actually go lower. And then when price gives us the sign to go lower, which right here you see is a break of structure, it's a fair value gap, right? You have all these liquidity targets and these pools and everything that's clear as day. Price is basically generating all the reasons to go lower while taking out all the reasons to go higher. And then price will make his move to go lower. And even on days where I'm not trading, because this is not a day that I would trade, you're still seeing everything play itself out and you're still catching price at the highest point of the day because the day starts here, right? It's like around this level. That's when the day starts. This is literally the high of the day, and you're able to catch the high of the day and you're able to ride the wave down because also when you think about it, this is also the low of the day, right? Because previously the low of the day was here. And now this aggressive move pushes below that. It pushes under this level. It got as close to these lows, right? So like this is the power of this strategy because you're pretty much catching if you're selling, right? If you're bearish, you effectively catching price in many cases at the highest point of the day and you're selling it all the way down. And that's happened time and time and time again. If you don't believe me and you're new here watching this video for the first time, go watch all of my previous videos for the past 2 weeks. You are going to see the same phenomena happen over and over and over. This is the same exact strategy that I've been sharing. This is the most powerful, most superior strategy. Nothing even comes close, right? Market structure alone is not the answer because people trade market structure and get burned because people see this move, they'll think price is bearish, so then they'll take a buy, right? And then price would go in their favor a little bit, and then they'll get taken out at this level because price made a push lower, right? For all the traders who bought here, right, they're celebrating because they're in a little bit of profit. And then guess what? If they didn't close out, because they probably thought that they were going to be in profit and they kept their position open, expecting price to go higher. And then guess what? If they didn't move their stop loss to break even, and they just left their position there, they would eventually get taken out on this move down lower, right? There's a reason why 90% of traders lose in this market because this market is playing both sides, right? This market is not only taking out, you know, buy is activating buy stops, so it's activating buy side liquidity and taking out sellers who sold early, right? Any sellers who were selling at this level, they got taken out with this high, right? Market is activating and taking out both buyers and sellers. It's playing both sides. So you need to show up to the market anticipating that it's going to play both sides, anticipating that manipulation is going to happen, and you capitalize on that, right? Now, technically, if most people took this trade, they probably would have taken a loss if they put their stop loss right at the high because with spread, right, this most likely would have taken you out. But if I were to have taken this trade and lost right here and seen the rest of the move play out the way it played out, I'm still gonna be happy. I'm still gonna be smiling because I know that that loss was just a result of spread, but it wasn't a loss that was a result of incorrect logic. It was that I did everything right and price just got really close to my stop loss and would have potentially taken me out. But then everything else about the trade played out to the T. So even if I were to take a loss on this day, this would still continue to give me confidence and the belief that this is in fact what is happening in the market because I'm showing you that this is in fact what's happening day after day after day after day. And it's only this is never going to stop. This is going to continue because if the market is beating 90% of traders, then the formula is working. The system is not broken. It's doing what it's intended to take out most people. And for the select few who are smart and patient and understand the game, those few people are going to be the ones to profit. So this game is never going to change. This is why I'm so passionate about sharing this with you and trying to teach this to you so that you can be able to do this on your own so that you don't have to depend on me or depend on anyone else. And if you have this skill, which is of course a high income skill, this is something that can allow you to be able to earn for this for the rest of your life. And you can earn from anywhere in the world. And it's also a skill that you can teach other people. And you can also share this knowledge with your kids or with family members or right other people, right? And this can truly change lives. So just figuring out seeing this, you cannot unsee it anymore. I used to never be able to see this and I used to get burned so many times by the market and I never used to understand why. But now the fact that I see this and it's happening over and over and over is like you now cannot unsee it because this is the game. This is what Price has always been doing. So that wraps up the video. Enjoy the video. Do leave a like and subscribe as we're on the road to a million subscriber, guys. So once again, it's Joel and I'm out. I'll see you guys for the next video.